Hi, this is Giles Mooney with an update on the various news from Rishi Sunak and the COVID-19 government assistance plans. Um, this video is meant to follow on from the previous videos that I've prepared for you. So do have a look at those first. We're only going to update you, but we do have some quite big news to update on. Recording this on the 19th of April, and the announcements were made just a couple of days ago, but we were waiting until we'd had confirmation on a couple of points from HM Treasury and HM Revenue and Customs. And now we've had those, there are a couple of things that we really need to pick out. So let's have a look at the job retention scheme first of all. And the first big news, of course, was Rishi Sunak announced that it would be for a minimum of 4 months rather than 3 months. So we're now looking at it running from the 1st of March, and we're looking at March, April, May, and also June. We have not as yet had any confirmation that the self-employed income support scheme will follow suit and be extended from those 3 months to 4 months. I would expect that will happen in the relatively near future, but we haven't had it as yet. So as ever, keep an eye on gov.uk to check on that one. We haven't had a confirmation that the VAT deferral will be extended. And my gut feeling on that is that the VAT deferral probably won't be extended. Now, the logic for that is they've given us till the end of June, payments till the end of June. If you remember, we can wait until later in the tax year to pay that off. Will they extend that? I wouldn't have thought so, because if a business is still making VATable supplies and is in a position to do so, I guess the revenue are saying that they should receive their money for the VAT that's been collected by those businesses. So as I say, 1 month extension for the job retention scheme. We expect news on that for self-employed as well. We don't expect news on that for VAT. Now, this scheme is something that is staggeringly generous, and a lot of people talking about a change made this week that makes it a lot more generous. I'm not convinced it does actually make it a lot more generous for most people. You might remember that previously we talked about the job retention being available to any employee who was an employee as at the 28th of February 2020. They announced this week they were extending that to the 19th of March 2020, but they have been very, very clear. They have confirmed that although the date moves to the 19th of March, a submission to HMRC, what we call an RTI submission, a payroll submission relating to that person, must have been made on or before the 19th of March. And that's problematic because, of course, if you run monthly payroll, anybody who joined between the 28th of February and the 19th of March is unlikely to be on a payroll until we get to the end of March. And as a result of that, this date change has absolutely no effect for those people. This will benefit some. It will benefit anybody who pays their monthly payroll mid-month. And it would also benefit anybody where we had weekly employees, where a weekly employee had joined between the 28th of February and the 19th of March. But generally speaking, I am not convinced that this is quite as dramatic, quite as impressive as many people thought it was. So be aware of the change of date. It might benefit some of your employees, but also I think an awful lot will miss out because of that requirement. I'll say it again, for a submission to have been made on or before the 19th of March. Now, I'd like to work through an example with you on exactly how much grant would be available. And this is an example we did before. The understanding from the Treasury has now changed. So we need to be very clear on this point. The previous version of this example was misleading. So please make sure you're happy with exactly what we're talking about here, following a change of guidance from the Treasury. The example is very simple. A Limited is employing me at a salary of £2,000 per month. Because it's a fixed salary, we don't need to worry about the last 12 months. We don't need to average over a period of time, anything like that. We just take the last payroll from February, March, and that'll be £2,000, so no problem at all. Now, let's assume in this example that A Limited is going to keep paying me that £2,000 a month. The question is, while I'm being furloughed, the question is, how much can I get back from the government? The answer is that £2,000 a month, the national insurance on that, the employer's national insurance on that would be £174. And the grant will be made up of two parts. First of all, the lower of 2,000 times by 80%, my 2,000 times by 80%, or £2,500. Okay, so the first part of it is that it's 80% of gross earnings, or £2,500. Now, on top of that, once we've worked out that figure, of course, in this story, that would be £1,600, we would then be entitled to the employer's national insurance and, of course, any auto-enrolment contribution on the figure we've just calculated. So it is irrelevant that A Limited is going to pay me £2,000. It is irrelevant that the cost for employer's national insurance for A Limited will be 174. The amount of grant I'll get will be 20% of the 2,000 plus 122, being the employer's national insurance on £1,600. If I was involved in auto-enrolment, then yet again, there would be the additional minimum auto-enrolment for a £1,600 salary as opposed to the £2,000. The point is, as given on the final line on this slide, the maximum I'm going to get is 80% of my gross salary plus whatever employer's NIC and auto-enrolment relates to that 80% figure. Hopefully that makes sense to you and you can see how it works. Now, there is something extra we need to be very careful on this, and it's something that's cropped up in the last day or so. We asked HM Treasury for confirmation. They've now given us this confirmation, and it relates to the employment allowance. Now, if you remember that in a normal year, and this is for this purpose a normal year, an employer can receive what is effectively a grant to cover the first element of employers' national insurance that they pay in a year. It was £3,000. And for this tax year, it's £4,000. The question is, how does this new set of rules relating to furlough and what have you, how does that interact with this £4,000 employment allowance? And the answer is that when calculating the NIC that you would like to claim back, you must first of all allocate the employment allowance against that amount. So in our very simple example on screen, in that situation, if this is April, there is a very strong likelihood I would not, in fact, get the £122 back from the government, because in April, I'm probably inside my £4,000 of employer's national insurance that's covered by the employment allowance. And so I wouldn't be able to reclaim the 122. I wouldn't, in fact, be able to reclaim the 122 until I had used up £4,000 worth of the furlough employer's NIC, if you like. And then we would then enter a period where it would be added to the grant. Hopefully that makes sense. As far as your payroll is concerned, of course, absolutely nothing changes here. As far as your payroll is concerned, we would pay me £2,000 in this example. The employer's NIC would be 174. Now, of course, the 174 probably covered by the employment allowance. So my total outgoings as an employer would be £2,000. What would I get back from government? Well, £1,600, no problem, no questions asked. I wouldn't get the 122 because I'm still inside this employment allowance area. Do watch out for that. It's going to make the computations a little bit more complicated than we'd originally thought they would be. But I would have thought for most employers, probably by April, May, June time, you'd be looking at having used up your employment allowance, and then we'd be into normal, if you like, furlough payments. Will we ever have normal furlough payments? But you'd be into a normal situation where, as well as the 80%, you could also add in the employer's NI and auto-enrollment on the money that you have calculated as part of this. Now, when calculating, and I'm sure you'd picked up on it, we are now getting into the nitty-gritty of exactly how all of this works. And so I'm sorry it's slightly more complicated than the previous ones, but hopefully making sense. When we're looking at what wages to include, we do include regular wages, fine, and also any non-discretionary overtime fees or commissions. Originally, they had said there would be no overtime fees or commissions included. Well, you can include it if it is effectively contractual, if it is something that you are obliged to pay. You would not include any payments that are discretionary. Now, that would include tips, but would also include any commissions or fees over time that varied and therefore was not required to be paid. The other thing that they have reminded us, which we already knew about is that any non-cash payment or benefits, cars, things like that, you would not calculate as part of the furlough calculation. We have had, since I last spoke to you, confirmation that there are other people as well as pure employees, if you like, who will be able to claim under the furlough regime. The office holder rule we were hopeful of previously, and we have now had that confirmed. Directors of companies, salaried members of LLPs, people working through agencies, including umbrella structures, all fine, and personal service directors, IR35 type directors. The one catch, the same as employees, you have to be under PAYE, and we have to have evidence that you're on PAYE by the 19th of March. If you can meet those requirements, then you are absolutely entitled. Now, we're told that the claim itself will happen next week from the 20th of April. I would say certainly next week. I might not go for Monday, but certainly this week we will see the ability to claim. And exactly what we expected, really. It will go through the e-PAYE regime. It will go through the online systems that the revenue have, and the information as given on screen here that will be expected for from any employer relating to all of their employees seems fairly reasonable. The PAYE reference number, the number of employees, their names, their NIC numbers, information about the employer, whether that be a UTR number, a company registration number, all that sort of thing. The amounts claimed, I don't think there's anything too shocking within this list. The two things I want to highlight, though, first of all, the revenue have confirmed that you, the employer, will do the calculation of how much is to be repaid. As we've just demonstrated, that will not always be straightforward. They have said a calculator will be available online, and that will really help. But when doing this, you must make sure that you keep records for every employee that you do these calculations for. I do worry that people will do the calculations and then just fire them off and not keep the paperwork. The revenue have confirmed they will audit this. They will review this in the future. And if they decide that you incorrectly calculated, they will chase you for that. So do be aware, do make sure you keep full records. The other one we sort of knew would probably happen, but it's not great that it's happening. This data that is on screen at the moment, that will all have to be submitted if you have up to 100 employees by going into the revenue system and adding it line by line, employee by employee. With 99 employees, that is obviously very frustrating. 100 or more employees, they've said you can submit an Excel file or similar with that data in it, and you won't have to go through the furlough. That doesn't help people with between 1 and 99 employees. It will be time consuming. Make sure you're careful as you enter this data, because when entering national insurance numbers, etc., we can have all sorts of problems. So be aware that they have now confirmed how it will work. They've confirmed that it will start from next week. And also watch out for those calculations, because as I've just demonstrated, rather more complicated than we had first thought. Let's now move on to the self-employed income support scheme, which again, we have some good information that we've just been given in the last few days. The revenue have confirmed calculation measures and what have you. Just to pick up on one point on this slide, the revenue have confirmed that they hope to contact people by the middle to the end of May. And if they are going to contact people by the middle to the end of May, any communication you receive from people claiming to be the revenue before that almost certainly is not HMRC. Certainly we're hearing about a lot of people being texted and also receiving emails allegedly from HMRC saying, send us your bank details so we can pay you this money. They are absolutely fraudulent. They are not real. If you know anybody who is hearing from the revenue allegedly saying, you know, we want to start paying you this self-employed income, it's nonsense. Be very, very careful. One of the saddest things I think about any worldwide problem of this nature is that some of the people who come out from under rocks really should have stayed under the rocks. These people are fraudsters. They are trying to steal money. Be very, very careful. The calculation on this, we already knew was going to be your profits from your tax return effectively from self-employment, so either self-employed or partnership income, and it would be the profit from that to a maximum of 80% or £2,500 that would be paid over to you. Now, first thing to pick up on that, The decision is that they will calculate profit as per the tax return. So it will include capital allowances and what have you. If you are involved in farming, for example, so you've averaged your profits over 2 years, then they will ignore the averaging. They will take your profit as it is effectively. So do make sure you're happy with that particular situation. Also watch out for the fact that with certain situations, for example, a loss brought forwards, it might be that in your tax computation for the year you had a profit, but it was written out by a loss from a previous year. Well, they've said that they will ignore any loss brought forwards and then set off against a current year profit. So we're looking at the profit as calculated and included in your tax return. That's the first thing to pick up on. Secondly, remember that if your profits are £50,000 or more, then you will not be entitled to this regime. Also remember that if more than half of your overall income comes from your self-employment, fine, you can claim. If half or less of your total income is self-employment, you will not be entitled to make a claim. So always watch out for those couple of points. The other thing I want to highlight to you on the self-employed scheme is something that will have quite a dramatic effect on some calculations, and it relates to the use of losses in the current year, not brought forward loss, and in the year loss. Now, an in the year loss in this situation, best looking at an example here on screen, they will include as a negative figure. We thought at first they were going to include it just as zero, but they're not. They're going to include it as a negative figure. As a result, if I had a 60,000 profit in 16-17 and the same again in 18-19, but a loss in 17-18 of £30,000, I would add the three together. So 60 plus 60, 120, minus the 30 is 90. On average across 3 years, that's 30,000. Now, the first thing to notice, of course, is that pulls down my profit quite significantly, and that could affect some people in the whole 80% or 2,500 calculation. More importantly for this person, if they had had 3 profit years of 60,000, they wouldn't qualify for the regime. But because of that loss in the middle year, the 260s effectively are pulled back under the 50, and therefore we're looking at potentially being able to qualify. I think that is a really important point and really does highlight the need to look now at your calculations, satisfy yourself that you will be entitled or you won't be entitled, depending on what your conclusion is, and then wait patiently, I'm afraid, till the revenue contact you in May to say, look, would you like this money? One last thing I want to highlight to you, if I could, and it's in terms of time to pay, and I always finish on this point, just to say, do not let yourself get into a position with HMRC where you owe them money outside of what we would normally owe them. If you are in a situation where you are struggling to pay your PAYE liabilities as an employer, your corporation tax, perhaps, whatever area of tax it might be, if you are struggling to do so, you should contact the revenue. Discuss with them the idea of a time to pay agreement, discuss with them the idea of a time to pay arrangement. And here's the important point for this particular program. They've changed the phone number. There is a specific COVID-19 phone number for time to pay arrangements, and they have changed it. They have changed it to the number now on screen, 0800 024 1222. That is the number to ring, and do ring it. People are there ready to answer your calls to help you out and try and make sure that people come through this as well as they can in terms of their tax arrangements. As ever, hopefully that has proved a useful program, a useful exercise just to work through those key points. I think there's an awful lot of stuff going on there. As I say, the revenue have confirmed that there will be calculation software available in the very near future to help you with your calculations. Watch out for the employment allowance. I think that's an important one, and watch out for your entitlement to auto-enrollment as well. Apart from that, we now have the data that we need to know what we're going to actually file. We can start to look at that. And for the self-employed, now we have those detailed calculations from HMRC. We can really understand exactly how those calculations will be performed and therefore how much we will be looking to claim. As ever, keep well. I hope that your businesses go well, but more importantly, I hope that you and your families continue to be well. Best wishes, and perhaps speak to you again.